Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you. And what is a relatively quiet morning? We are back up. If you recall, we sold off hard into the close yesterday. We're sort of back up here this morning. So I guess that's notable. Got a couple of headlines on our radar. We talked about SPACs for the last 10 minutes, but I mean, we could talk about SPACs every day. Apple's in the news. Penn National Gaming is in the news. Best Buy had a headline. Moderna is in the news. So we want to talk those. We want to talk video game stocks that just keep on running. I want to get to those as well. Our guest today is Nick Shaheen. He's the author of Create Income with Option Spreads. He'll be on at 8:35. We'll get to some questions from our chat later in the show. Before I throw it to Joel, I want to remind you all to hit that like button. Show us some love. We appreciate all the likes on YouTube. And now I will throw it to Joel, and Joel will recap for us how exactly we have bounced back here in the pre-market trading session. Good morning, Joel.
Good morning, Spencer. We kissed yesterday's low a little bit after midnight. 37.5 was your low for yesterday. You hit 36.25, and the buy the dippers came in. We're up 23.5 handles, 3,668.50. That's your pre-market high. There's a nice target for you, but that's only 5 points away. All-time closing high, 36.93. Crude's in the green by 17 cents at 47.16. Gold in between 18 and 1900 here, up 15.60 at 1847.90. You also have silver in the green. Silver's in the green by 35 cents at 24.05. And then Bitcoin trying to clear that $20,000 level again. We're up $95 at $19,365. Good morning, Triple D. We got a comment that you were pretty calm on the show yesterday. Is this going to be a repeat calm show, or are you going to get riled up?
I never know. I wing the entire thing, so it's just a matter of what gets said by whoever, that whether I get wound up or not. I'm fairly calm this morning. Didn't drink coffee or anything. So
everyone always asks that. That's like the most commonly asked question on pre-market prep chatters is, what kind of coffee does Dennis drink?
Because they want that. Because I don't drink any caffeine. Bro. Can you imagine me on caffeine? Can you imagine if I was drinking coffee? I'd be bouncing off the walls and be talking so fast nobody would ever get a word in. At least the odd time you guys get some words in. I was on coffee. I just talk nonstop and you guys wouldn't say anything. So you'd hate me.
It'd be the whole show.
Yeah, but, it'd be one run-on sentence.
I know you want to talk about SPACs, right?
I love SPACs. Yeah, they're fun. I can talk about anything, but that's SPACs. The SPACs are fun. What do you want to talk about?
Maybe we should start with Apple here, because that's like a stock that people actually have heard of and can move the market, move the overall market. The headline here, and this, I think there were some analysts that were out last week just about the strong iPhone demand. So following up with that, Apple said they're going to increase their iPhone production in the first half of the year. Basically, they're going to produce 30% more iPhones in the first half to respond to that, what is apparently extremely high demand for the iPhone 12.
Long Apple. I stay long Apple. One thing I will say, and let's just take this over to Tesla, is you texted me last night, what's going to happen on Friday when we add Tesla? And we know Tesla's already continuing the run, which was somewhat predictable that it was going to have a strong week. We talked about it all last week, and it had a really good day yesterday. It's up here again this morning. I think it could even hit 700 this week just because everybody's got to buy it. But who knows? Nothing's for sure, but I would not want to be short Tesla right now. But if we're going to pile into Tesla, if all the ARBs and all the S&P are chasing Tesla Friday, Do they sell off everything else? I mean, we haven't seen, a company that's kind of market cap to get out of the S&P. Do we have some of the major components like an Apple, like a Google, like a Google, like a Microsoft? Do they get hit simply because Tesla's going in? I'm asking the viewers. I'm asking you guys.
I mean,
I don't really have the. You text
I
me. I don't really have the answer to because we haven't seen anything like Tesla size go in before. So I don't know. I kind of think they will. I kind of think you could see some nervousness maybe Thursday or Friday. So maybe this is the rally you sell. If you're short term, maybe you get to the sidelines for this Tesla event. And then what I will say is how I'm going to play it, because it's so unpredictable, is if we get a serious sell-off in a lot of major S&P components simply because Tesla's going in, I think that's going to be a buying opportunity.
Right,
so
right.
I'm going to put some bids out there, on my shopping list. And hopefully, if we get some, and maybe it's a non-event, maybe it goes in and everybody's talked about it so much, maybe it's not going to even be a mover. But, if we get some weakness, that's just because Tesla's going in and get some weakness in some of these other S&P components, then maybe, you use that as a buying opportunity. But I wouldn't be like just loading up like Apple today or loading up anything, because in 3 days, we're going to have an event happen that we don't really know what's going to happen with the other S&P components.
I mean, you got to make some room, right?
I think so, yeah.
I mean, I'm just trying to look at this
why
logically.
Not knock the big boys down a little bit to make the room?
I mean, that's what I was thinking, and that's what I was thinking happened a little bit yesterday. Because you got the lead, and but it really wasn't the tech that sold off. But I'm just thinking, just from a mathematics, do we have anybody that we could dial up for this that would be good along these lines? We don't have any true indexers as guests.
Well, we could reach out to Lawrence Black, who runs that index shop. He was on our show, I want to say in July or August.
Okay, you want to reach out to him, Spencer, and see? I mean, just to get a
It'd be nice to find somebody that's actually got to buy the S&P or buy Tesla. Like, who's got to buy Tesla out there? They're saying all these people got to buy. Maybe we can find. How are they going about it?
Yeah,
can you get ahead of it a bit? Like, are they getting ahead of it a bit? Can they buy, or do they have to do it all on the close? I mean, a lot of them are going to do it on the close. It's going to be very interesting. I mean, there's so much anticipatory money. And what do we mean by that? It's people who are banking that the indexers are coming. So you have seen this move from 450 to 640. Don't kid yourself. It is a crowded long in Tesla right now. It's very crowded. The anticipatory traders are just saying that the indexers got to come though, and it's gonna, they're gonna come in and get me out. So if you get it too crowded, you could see them pull the rug out from under it the day before. Kind of like, on Russell rebalance day, a lot of times you'll see, the companies going in start selling off the day before. They do it early. So could it, do it early? And that's why I've said all along, I think Tesla tops out, but I think it tops out either the day before, the day of, or the day after. I'm not sure when they're going to pull the rug out from under it, but there's a lot of people who are along this just for those indexers, and those indexers don't come as big as you think they're going to come. Then you're going to see the stock have a wicked sell-off instead. So it's not just a slam dunk that it's going to 700. I think it's going higher. I think it's making new highs. I would probably, if I was in it, I'd probably want to get out a couple days early, like maybe tomorrow, if it starts going 670, 680. I don't know if I'd stick around for the fireworks long because it doesn't necessarily have to do anything.
It's going to be one day, interesting day. Just talking about Apple here, and that 125 to 126 area. I mean, you're up $2 today because of the sell-off yesterday. That after the September tech wreck, it got back up to that area. You got back up to that area again last week. And then you guys know I'm just going to give you that price is going to drive you crazy. But the pre-split closing price that was on August 8th, obviously Tesla's far performed since then, primarily because of getting added to the index. But on that Friday in August, before it was added, it closed at 124.81. So I've just been keeping that 125 level. If it gets back up here, if you're selling, it's kind of no man's land. But that's a look at Apple. Major resistance there.
While we're on the topic of index rebalances, the NASDAQ 100 only rebalances once a year, and that's coming up here on the 21st. So they announced, it was yesterday. Yeah, it was yesterday morning. So Peloton is in the queues.
They're going to do that on the Friday night too.
It's effective on the 21st.
So that means it's going to be on the Friday night as well.
Yep.
Holy, they loaded up. I'm going to tell you one thing I'm going to promise you is there is going to be some absolutely incredible moves on Friday the 18th. There is going to be some incredible moves. Picking the direction is still a little bit unknown. You would logically think Tesla's going to go up and the S&P stocks are going to go down. But like I said, they could pull the rug out from under and do the trade backwards. I've seen it happen and Russell rebalance. And you know, those indexers got to come in and buy those stocks too. And sometimes they've done it the day before or it's just too crowded. But I mean, now you got a NASDAQ rebalance too. So that's going to throw out Apple and Google and probably a lot of the other guns as well. Very interesting day it's going to be. I'm going to be playing the fade trade that day, meaning into the close. I will be fading moves. So if you start seeing a wicked sell-off end of the day, Apple loses $3 or $4, I'll probably be buying it on the close. The way you play that is if you have access to it, and if you see your discount retail broker, you might not have access to those orders, which is why, you know, free trading, you kind of get what you pay for. But it's the LOC or limit on close. I put a limit on close order out there and it says, fill me on the close at this price, at my price, or kill the order. So I don't get filled ahead of time. So if you see the stock crashing, if you have an order to buy a stock, let's say I put an Apple, you know, limit on close order out there at like 120 and it starts going down to 118, 117. I'm not filled yet. I'm not filled till the close. So if it prints 116 on the close, I get 116, not 120. Because I put it limit on close. So I'm going to get whatever the closing print is if it's below where my limit price is. That's the limit on close order. I use that order every single day, multiple times. It's the way I participate in the close. If I'm liking a stock for a story and I want to buy it on the close, I use the LOC. A lot of traders use market on close. You can use those too. That gets you in no matter what. I never like writing a blank check though, so that's why I don't use market on close orders. I use limit on close. That's how I'm going to be playing Friday. It's fading using LOC orders.
You know, it does kind of like your overall strategies. I mean, you know, sometimes if you have a catalyst and you know,
it's a big word, anticipatory
event, you know, like earnings or something. But this, you're like, take her up, take her down, you know, come to Papa instead of.
I'll fade it. I'll fade the movie either way. And what I've said for years to traders in our firm and also on this show is when you have moves in stocks that are purely based on, you know, a rebalance, like order flow reasons, nothing to do with the companies, those moves often get retraced. It's not all the time. Nothing works 100% of the time, but they often do. So again, you know, that's why I look at that as an opportunity where, okay, we're going to sell all these stocks potentially off or buy, you know, Tesla just because it's getting added. And will I fade Tesla? You know, people are asking me, I'm going to short Tesla. I don't know yet. It depends what it does. It's going to be interesting. I might get down to it. I won't get crazy size in Tesla because it's going to have some wicked moves. But will I fade the close on Tesla? Maybe.
That's and also, I mean, one thing that's kept me, you know, following Tesla is same thing as with Apple. You know, where was that close after the split, right? And Tesla was way down there because they've had several other catalysts. And I actually wrongly thought Apple might outperform Tesla after the split, but that couldn't have been more wrong. That man, that pre-split close in Tesla, holy mackerel, that was way down. Oh, I don't even want to look. I'm going to get sick. 290.54. Wow.
Yeah, but after that, so
the catalyst.
But it also, so you're talking after it split though. After it split, it sold off. We topped out that day after the split, like a day later.
At the wrong day.
No, we sold off. We sold off significantly after the split.
I'm looking at the wrong day. But it still was 442.68.
And then we sold off $100 after that.
Yes.
So there was some big money made shorting it after that split. Don't kid yourself. There was some money. People make money shorting stocks. I know there's some rumors and there's people tweeting out there that you can't make money shorting stocks. I make money shorting stocks, you know, and I was talking to, you know, my buddy Krishna there, give you a shout out. He listens to the show sometimes, 7 points. And he says he makes, and he's a great trader. And he says about 75% of his money comes from the short side. So there is money to be made shorting stocks. I don't advise retail and newer traders to even touch it. But like I say, I trade market neutral. If I'm going to be, if let's say set up a hypothetical situation. Let's just say they sell off a lot of S&P stocks, major components on Friday at the close, and I get long a whole pile, of S&P stocks. What am I going to do? I'm going to be selling SPY against it because I need to hedge myself out. I need to get rid of that market risk. So like I've said, I trade, and people don't understand why I would ever do that. I trade market neutral in my overnight and day trading portfolios. I'm always hedged. What am I trying to do? I'm trying to reduce overall market risk. So the market tanks overnight, I'm okay. Market rallies huge overnight, I'm okay. It depends on how your hedges are, so it doesn't always work out perfectly. But overall, during March, this is how, I perform because, I'm hedged. I'm not just flat out long and the market falls 5%, I lose 5% of my money. And my long-term portfolio would be that way because my long-term portfolio is long only. But on my swing trades, usually I try to hedge them out. And my day trades, I might be biased on swings sometimes, but my day trades, overnight portfolios, I am hedged. I am shorting some stocks. And if I've got a whole bunch of longs, I'll short SPY against it then. Or, I'll short Qs if it's a bunch of tech longs. So I do that to smooth my earnings curve because I like to be consistent. Because if you didn't, if you had the greatest technical setups and all of a sudden the market tanks, it doesn't matter what your technical setup because the market got slammed and you're losing money. Well, I can have a great technical setup. If that stock stays flat and the market goes down 1%, I made 1%. So that's why, I do market neutral hedging. And most of the traders at Bright Trading do it that way too. I think most of your prop firms are very respective to market risk. And if they're trying to extract alpha from an individual strategy, they're, often doing different hedges to, cleanly extract that alpha and smooth their earnings curve.
Can I finish going through the names for the NASDAQ rebalance? Because I think it could
Please.
be worth watching on Friday. So you've got Peloton is in, Atlassian, which is Team, they're in. Okta, OKTA, they're in. Marvell Technology, MRVL, they're in. Match.com or Match Group is in, and American Electric Power, AEP, they're all in.
This is into the 100?
Yep, this is
into the Qs.
Into the Qs, and then who's out? Biomarin.
You gotta go through the list one more time,
Spencer,
slower. I'm writing it all down.
Okay, I'll go slow.
QQQN.
Yeah, just pause for it.
This is important because if you're trading these stocks, even if you're not an index arbor, to understand that if they are going in or out, there's going to be some wicked moves on Friday. And maybe that gets you to a target. Maybe that gets you out of something or into something. Maybe there's some buying pressure that'll get you out of your stock, your swing trade long. So even understanding how the arbitrage works can help you with your swing trading, even if you're not index arbor. So give them to us one more time.
Who's in the queue starting as of Monday, as of the 20th?
So this is going to be Friday at the close when these are going to go in.
Reflected as of Monday morning.
Yeah.
Peloton is in.
Yeah.
Atlassian Team is in.
Yeah.
Okta, OKTA, they're in. Marvell Technology Group, MRVL.
Yeah.
Match Group is in.
Yeah.
And American Electric Power, AEP. They're all in.
I love how they put the utility stock in. Like the Qs, everybody thinks it's all tech stocks, and it's
Yeah,
like 25 non-tech stocks in there.
So who's out as a result of that? You've got Ulta Beauty is out.
They kicked Ulta out.
Oh, they kicked Ulta, huh?
You got Take Two, which is running. Maybe we should talk about that. Take Two is out.
They kicked my Take Two out.
Why would they do that?
You've got a media company, Liberty Global, LBTYA. There's actually two tickers, but
too many symbols.
Too many symbols.
Okay. Expedia is out.
It violated the 4-ticker symbol limit. Next.
Citrix, CTXS is out.
Apple components. That's probably up today because of Apple.
And Biomarin.
Citrix, yeah. And
BMRN.
Biomarin, BMRN.
That's the last one. You got
those are out.
6 in, 6 out.
I love that. Okay, this is information that we give you here on Benzinga's Pre-Market Prep that you will never hear on CNBC. Because you know what? CNBC's got to attract the masses, and they're attracting their fundamental, valuation matters. We're talking trading. We're talking what's going to move on Friday. We're telling you the movers before the movers happen. I'm not giving you the direction here because sometimes these things, like I said, they pull out. But let's just take a look at some charts here. Is there some movement here on these stocks that are going in and going out? I mean, everything's kind of been moving up in the NASDAQ. So Match went the other way yesterday. But Altus has been hanging out. Take Two's been running. The video gamers have just been on fire. Although I wonder if that was that Take Two, that little sneak over 200 and then tank it underneath it. You wonder if that didn't put a short-term top in there yesterday, upside capitulation. What are your thoughts on these stocks, Joel?
Oh man, I mean, some were right. I mean, going back to your statement about, the effects of these stocks, the trends, I mean, maybe it'll reverse a little bit the ones that are coming out, but man, it's a lot of math, and I think I'll just go with whatever the trend was prior. If you get a reversal in that trend, look where it closes, look where the levels is, and look for the reverse on it. I mean, that's I don't have any. I mean, some of them most of them had pretty nice looking charts. So if they're getting kicked out, it may be an opportunity to buy the dip in them.
Well, I mentioned take two. If you,
Yeah, wow.
well, you don't have it's TTW. Yeah, I mean,
I'm still long it. Full disclosure.
it's been running. They've all been.
I'm lucky I'm not looking at this thing. I would have probably sold it. That's in the long-term portfolio. I thought it was like a 180. I didn't know that 200 yesterday. I probably would have sold it. Lucky I don't look at my long-term portfolio.
It's so AIV's getting kicked out of the S&P, right, Spencer? Did you?
Yeah, everybody's talking about AIV. This is not down 84%. I don't believe this is actually a spinoff.
They're spinning off their apartment income unit. So it's now spinning off into there's AIV and AIM are the two tickers.
What is the new symbol?
So they're spinning off their new unit. It's going to be AIM as in Mary. AIM.
Yeah,
AIM or AI, because that's a different stock. That's AIM Immunotech.
Oh, wait, hold on. No, AIV is spinning off its business. I'm reading from the PR.
AIRC. So you add up the two prices.
Yeah.
So everybody on Twitter, and I mean, it is littered with people. Oh my goodness, AIV's down 80%. What's going on?
Not.
PreMarket's Prep. It's not down 80%. It is now you own AIRC as well as AIV. So you add up those two prices, $6.10 plus AIRC. I'm assuming you got, and you got $36. You're actually up money today here in AIV. It's up about $1 when you add those two up. So it's not down 85%. It's actually up $1. Sorry, shorts. I know if anybody was short this, they got excited. They thought Tesla had knocked AIV's market cap down 85%. Sorry to disappoint. They did not. If you were short the stock, you now are short AIRC at 34.47. Actually, I don't have the close on it, so I'm not even sure about that price. They didn't give me a close on where that AIRC is open. It's just trading for the first time today,
though. Okay, we do have an M&A deal. I want to run through real fast.
Every day we have one.
Nah, it didn't seem like we had one for a while there, but we had a few yesterday, and then one. Eli Lilly's entering the genomics space. They are acquiring Prevail Therapeutics. PRVL is the ticker there. They're getting acquired for $22.50 a share in cash. Plus there's a contingent value. So it could be worth up to $4 per share extra. So you're talking could be worth up to $26.50, but for now it's $22.50 a share in cash. That's what Eli Lilly is paying for PRVL. I tried looking for it's a very small company. I was trying to find other gene editing plays, and I couldn't really.
They must like this deal, Joel. It's up $4. Did Lilly had some other news though too, didn't they? I thought I saw something else this morning. They have some guidance.
There may have been some guidance. Let me check.
I thought I saw something else fly by. No, I'm not.
Oh, you know what it was? They announced a dividend raise last night, and they updated their guidance.
They did do guidance. Okay.
It was a slight guidance raise. Looking for the numbers here.
I don't know about Lilly. What do you think here, Joel? This is a tough one.
Well, if you go with like the bottom here, I don't even know what you call this here, island bottom with a gap up.
Yeah, if you look at chart, man.
Yeah, if you look at the 1, 2, 3, 4, 5, 6 days, then you wait 2 more days and it might be a possible reversal. That's what I would say, because that was a weird old pattern here. And, obviously this was one of the first vaccine Monday, which it never came back down to that level. And then now you're doing the same thing. So let's see it hang out, consolidate for a few days. And I mean, I don't know what you want to determine with a breakdown. Now it's trading above these highs at 162. This thing is quietly marched itself back within striking
Back?
distance of its all-time high of
Buy the dip
177.
works again.
Yeah,
Just buy the dip. They might be on to something here. It worked again.
it worked again, but for Lily to trade like that too, that's just a really, really, I mean, strange pattern for that. Trading up $4. Whew, I don't know. Depends what take your targets. If you got it, I'd say the next 2-3 days could be real important for this issue.
Yeah, wait, if I can just go back to the numbers there on Lilly for a second. They raised their dividend from 74 cents to 84 cents a share, and they raised their guidance, their full year EPS guidance. It's now in the mid $7 range versus a $7.32 estimate. And
Are they working on anything?
They have
for
COVID drug gun.
Yeah, COVID
They
stuff?
do. I believe they do. I remember them talking about it before.
Well,
They all have something cooking on that.
Hey, speaking of that, we should probably talk Moderna. The AdCom meeting, the advisory committee meeting, is scheduled for Thursday. So the FDA dropped some documents this morning, essentially saying that, I mean, we all know what's coming, right? We all know this vaccine is going to get approved. It would be a huge shock, I think, if this didn't get approved. But the FDA is saying in these documents this morning that the 2-dose Moderna vaccination is highly effective in preventing the virus. So we know this is coming. I want to look at Moderna, and then I want to look at Pfizer and BioNTech yesterday, because those things just sold off. So sell the news.
Oh, yeah. Pfizer got hammered yesterday. I mean, too much good news is priced into it. It was, obviously, we know it's not a game changer for the company's bottom line, but got a lot of.
No, but it's a game changer for like humanity.
That's it. So, but humanity doesn't pay, unfortunately, for Pfizer. So that's why obviously stock's coming back down. I mean, I think Moderna eventually sells off too. Does it get the approval? Does it get the initial pop and then sell off? Maybe. I mean, it means more to Moderna than it does to Pfizer. So you're kind of comparing apples and oranges, because Pfizer is a huge conglomerate where it's, got so much money, doing so many different things, where this is Moderna, this is, and Novavax. These are not necessarily one-trick ponies, but there's not a lot of tricks in the bag. So that's very important for these companies. Could get the lift up. I tend to think it'll be a sell the news event. So if it does get a rip higher when it actually gets the formal approval, is that what you're saying could come Thursday, is like the formal vaccine approval?
No. Just the recommendation.
But then that follows. So you get the recommendation, and then a couple days later the approval. It's going to come. I mean, the 94%, it's going to get approved. So is there a run up ahead of that? Maybe it gets the gap up on the approval, and then I think if I was in it, I'd be selling after. I maybe they get a couple days here, and then if it gaps up on the approval, I think it's a ring the register moment.
In the pre-market, to stop dead in its tracks at 160.33, did that in two different brackets, and now you backed off $3 from that. So that's a good level. And then on the daily charts, there's a double top at 163.75 from the last two sessions. So looks like you're building up some overhead resistance.
Wait, never mind. Sorry, I thought we lost your mic there, but that was my fault.
He's good.
Okay.
I hear him.
You're allowed to make a mistake every once in a while. We do all the time.
But
that's it. And then coming back on the downside, I guess if you want to try and pick this up on the cheap, I mean, just based on the trading action from yesterday and where it's trading today, you're closed 155.07. Be on a pullback here. May find some buyers at that area.
All right. About 8:30, we'll have Nick Shaheen join us in a few minutes. You want to talk the SPAC of the day? Or...
I want to go back. Everybody's asking me about this. People don't understand this hedging stuff. I had a whole bunch of questions flying at me, and they wanted to talk more about the hedging. People are saying, how do you delta hedge? What do you do? I just dollar hedging. It's not a perfect science. I just don't want to be long a couple $1 million worth of stock in my overnight portfolio, and all of a sudden the market pukes and I get hammered. So that's how I'm taking away, I'm eliminating the possibility of a bad market day. I mean, would I make more money in an up tape and I'm biased long by not being hedged? Probably. But again, what I'm trying to do is smooth my earnings curve. And then some other people are saying, how do you make money if you're market neutral? Well, it's down to your stock selection. You're not, you're all about, I'm about extracting alpha from my stock selection, not about extracting alpha from an up tape. So when I'm trading market neutral, it is perfectly, I'm not benefiting from an up tape at all, where, the market's up, 80%. I'm benefiting my long-term portfolio, but with IWM going up 20% in November, I wasn't trying to call the IWM up 20% in November. I'm trying to call individual stocks that I think are going to outperform. So, like I even, had set up that NCLH. It's nice when you don't even have to use the indexes as hedges. When I had that, talking about the NCLH long versus the Hilton short, because I felt like Hilton had run far enough and I felt like there was a catch-up trade in NCLH. I said that on the show. NCLH went up 50% after that and Hilton went up nothing. So there's money to be made right there. That's just a stock versus stock hedge, a classic pairs trade. Even though the two stocks, really aren't related, they are related in this whole reopening trade. But when you're putting on the market hedges, you're just taking away and eliminating any overnight market risk. So in this tape, if I was biased long the whole time, yes, I would be, performing well. But I'll tell you, a lot of times I'm biased short. And by me buying the SPY or buying Qs, it allows me to not get hammered when the market gaps up 2%. So I'm trying to extract alpha from my individual strategies, not trying to benefit from an overall up tape or down tape. I'm not trying to call the market. I'm using the market. And some days I will call the market and I'll be a little biased long that day. If I feel like the market's going to gap up the next day, I might stay a little bit long. And then I'm trying to extract a little extra from a call. But I don't make money, my core strategies aren't making money from making market calls. It's from making stock calls. It's from making setups. It's from different strategies that we talk about on the show all the time. And I don't want to get hammered on the market from an individual strategy. So if I'm making good stock calls, then I'm not eliminating, but I'm reducing my market risk. Kind of follow? I know Joel follows because this is Bright Trading. And this has been, Bright Trading's core strategies is hedge away that market risk so that you can live to trade another day. Because I'm all about protecting capital. I don't want to be on margin, and all of a sudden you get this 10% correction in the NASDAQ in 4 days. And, I was margined right out, and I'm down 20, 30% of my portfolio because, I was too heavy in tech stocks. I'm not.
Explain why, how you do it, but also kind of explain, why on the opens and why, things end up shaking out, sometimes sometimes your favor, sometimes not to your favor, but talk about, the open and the liquidity and how, things kind of come in as far mathematical wise.
Well, there's a core strategy that you're, alluding to here of, stocks open too high or open too low every day. It's why I talk about these imbalances, where you got a big buyer here. Like when I say, and I'll just give you examples here. I'm looking at the imbalances for the first time today. So I can see HPQ has 77,000 shares to sell. That's significant enough to take a note of, but it's not very big. It's actually a bad example today because there's not a lot of huge imbalances here. XOM has 46,000 to sell. CRM 31,000 to buy. Maybe that opens a little bit too high because there's a big buyer in there, and maybe I want to fade that buyer, so I'll sell it short to them, saying, okay, you got this huge buyer in the market. I'm going to fade it to you. I think it's going to make the stock open too high. And then I'm going to get short that stock. But maybe I'm long Qs against it because I'm looking for that CRM that it opened too high and I want it to come in. But if CRM opens and the market opens and the market goes here, well, CRM is going to go up too. But if the market goes up more in CRM, then I make money. So it's all relative performance. You're looking at different strategies. So I'm employing probably anywhere from, 20 to 30 to 50 different types of strategies, quantitative edges that I have, figured out, or, seen, and they change, over the course of my 21 years prop trading career. And when I'm employing those strategies, that's where I'm trying to extract the alpha from. So then I just don't want that overall market risk. Like, let's just say hypothetically, like on Friday, everything sells off and I get long millions of dollars worth of stock. Well, I don't want that overnight risk. So I'm going to hedge it out with the market because I don't want to be long a whole pile of a whole bunch of stocks. And then the market tanks. I don't know what the market's going to do. Maybe the market goes down on Monday and I get hammered. So that's where, I was just saying if these stocks gap down, I want to extract the alpha from the inefficiency that there has to be sellers because there's buyers in Tesla. So I buy those stocks long, short SPY against it, lock it in. Now I'm market neutral. And now I'm hoping for that gap to come back in. I'm not worried about, if I just buy here, market goes up, okay, I make money. Market goes down, I make money. But I'm not a genius for that. I'm not, extracting any alpha for that. I'm just benefiting from the up tape or the down tape. But when you go like this, stocks gap down, I want to lock it in with SPY like that. I'm looking for that gap to fill. And that's all alpha generation. Like I'm not, extracting any, of the market movement. It's all alpha. And that's what there's a website, Seeking Alpha. That's what I do. I seek alpha. I'm looking for alpha all the time. I'm not trying to make money off of an uptape. I'm trying to make money by picking stocks.
And
so I hope that kind of explains
this is so there's the two most common ways of hedging, right? Are via an ETF or via options. And
yes,
I want to bring on our guest now who can talk about Dennis hedges by buying and selling ETFs, mostly SPY,
Yeah.
but also the QQQs or anything, right? Any ETF or anything like that. Our guest, Nick Shaheen, he's the author of Create Income with Option Spreads. He hedges via options. Nick, good morning.
Good morning to you. Good conversation. Boy,
Yeah,
that
like
was
that?
that you had a lot to say there. I kind of like fell asleep in the middle a little bit.
I need more coffee. More coffee now.
My eyes rolled back and
You didn't like that? You don't like hedging? You're a hedger
no,
too.
I liked your enthusiasm.
You like to hedge though.
It's all about getting an edge, and you seek something because you have an edge because of your expertise. So that's the important part. So you're not willy-nilly doing something. Whatever you're doing is just you're first of all, you have a system. Second of all, you have the knowledge to get an edge, at least in your head, and then you put it into practice, and then you take it off when you're wrong. And that's what most people on retail miss. They go by gut, by feel. They don't have a process. And I think that's where the big disconnect is with between somebody who does it professionally and somebody who's just trying to get into it.
Like when you hedge yourself too though, Nick. Like a lot of times, even when you're writing
Yes.
puts, unless you're really convicted, you'll buy a lower put just in case
Yeah.
the shit hits the fan. You're always
Right.
one of those. And that's why I have so much respect for the way you trade, because a lot of people,
And you
come
need
in-
balance.
Yeah.
So not everything is directed one way, because you have one bad day or one wrong day, I should say, bad or good, depends on your position. So if everything long all the time, you get one bad day, and in options, it could be a 40% haircut to your portfolio in one bad day. If you've got nothing but calls and they're all shorter term and they're all to tech stocks, you get one bad tech day. You remember the -4% tech days we used to get?
There's some ugly ones in there.
That would decimate an all options portfolio that buys and hopes for a rally. So the portfolio should have balance. So if I'm long a whole bunch of stuff, I should short the indices somehow. And fine, that loses money. But when you buy insurance in your car, you lose on that. I'm putting lose in quotes every day.
Great way to put it. It's the insurance.
You crash your car, you're upset. But if you don't crash your car, you don't say, shoot, I wasted my insurance premiums.
And that's what it is. I mean, that's what hedging really is. It's the insurance against, adverse market movements. So, and like you do long, you do short, you go calls, you go puts, you're all over the place. So maybe sometimes in your strategy, you're naturally hedged because you got some bearish bets and you got some bullish bets. But would you sit there with just all bullish bets, all
Absolutely
the time?
Not. No,
absolutely not, he says. So there you go. And I mean, that's the one problem where, you get a lot of newer traders, they only put on bullish bets. So they're very dependent on an up tape. And it's been awesome. I mean, from April to May, June, July, August, September, I mean, there's a couple of hiccups in there, but it's been a predominantly up tape. So if you've just been long biased, if I would have went long everything, all my strategies all year, I would have probably made more money.
Yeah.
But would I have survived March? That's
right.
the difference.
This is not a typical market. I don't know if this is like the new normal of trading where everybody's involved and everything goes up all the time, but I just find that hard to believe. So I still stick to my process, even though I may underperform from the excitement perspective. So I don't catch a huge win. I don't swing for the fences, but I'll take my wins the way I usually take them. So when I place a bet in options, especially when I'm selling like a spread, I usually chase a certain yield between 12 and 20, depends on the position. And I'm happy with that. So if that stock I bet on the upside via a bull put spread, for example, where I sell a put spread below current price, which is a bullish position, and the stock goes up 1,000,000%, I don't participate 1,000,000%, but I get my win. So I should be happy with that. And if I see the upside potential, I may marry it in two ways. I'll do the bull put spread and I'll buy a bull call spread, which I've done recently on several occasions. So it has worked out. I did it with, believe it or not, Palantir. New stock to me, but I found the fans to be incredible. So I was like, I'm betting on the fans. And it was a good bet that way. So I'm expanding my horizons with regards to tickers, but I'm not changing my method of trading.
Speaking of tickers, you were requesting and other people were requesting. We used to do this with Nick. We'd give him a ticker. He'd give us a chart in 30 seconds and they'd talk about it and we just bang out tickers at him. And I'm going to do it with you now. I'm going to fly through some of these tickers with you. We want to get your thoughts. We're going to do it fast. So throw your tickers out to Nick right now in the chat and we will try to get to them. We're doing a quick 5-minute ticker time. We'll try to do 10 stocks in 5 minutes with Nick. Here we go. I'm going to get the first one.
What about Spencer? Are we gonna allow?
I got him up. Yep, I'm ready.
You want time? Put the clock. We should put the clock on them. Anyways, the tickers are starting to come out.
I'm ready to pull the charts up. Here we go.
Here they go. They're coming out fast now. We're gonna go Neil. Neil's the first one. And
I'm short.
Oh, he's
I'm
loaded.
Short.
I'm
short. That was quick. He's on the next one.
He's loaded. Short. He's loaded up on this one.
Okay, it's only Nick.
I'm not loaded up short. I am short.
You can give tickers. You can't give commentary.
Okay. I'm short because I wanted to be short, and my short position is green, but I didn't close it, and it's small, and it's to next year. And I'm not shorting the company. I'm just shorting the price action period. That's it. It is tight, and a move is coming. So it's either break down below 38, which it tested yesterday overnight, but that's like the 4th time it tested it. So it better hold the next time, versus there's resistance going into 44, 46, and 48. So it's a tight range. Play the range and know your time frame. My time frame is out the middle of next year, so I can afford to be a little bit short now, a little bit green, and I'm okay with it.
All right, we went over time on that one, so we'll get faster on the next one. Annie, Netflix. She wants to know about Netflix, NFLX.
Netflix. I'm long, and
it's got positions in these.
I like Netflix. Yesterday's price action. It looks like it's getting ready to get out of a trading range. So I'm definitely liking Netflix because of the breakout of the trading range. And the Disney thing is not a threat to Netflix. They can both exist. Parents can have it, what they want to watch, and kids too.
Really tough one. Airbnb, ABNB.
Oh shoot.
Oh shoot, we all there.
It'll take me 30 seconds to put in the ticker.
A minute. It's G's.
A rough ticker to type in. Doesn't roll off the tongues. Okay, so a huge pivot level is at 136 to 132 clearly, and it's not a lot of ticks, so I don't know if it's reliable enough for me to trade it. I'm sure I'm not going to trade it. So they have a lot of bookings, but I don't understand the business model. So I will need more history on the chart in order to trade it for myself. But clearly a new low will trigger new sellers, and they're going to have a problem with 132, 136, and if they ever get to 142 for sure. 140 if you want, that has like 3 major ticks inside of it.
Roku.
I haven't looked at it in a long time because it's THTH. It went to where it's too high to chase for me and too hot to short, but it's definitely extended from the chart perspective. And I'm not saying you should short it. It's one of those things where I missed it and I should wait for the next load. I did look at their financials and they are going in the way where I used to complain. What I used to complain about is going away, kind of like what Tesla did. So I'm not going to knock it for that same reason I used to before. 300 clearly is got one nice candle from December 10th. There's another pivot around 280, and the best pivot is around 260. I don't think we get 260 or 258 anytime soon, but that would be an outstanding place to get long.
Walmart. Lots of people in the chat want to know about Walmart.
Okay, so I like Walmart, and on dips, it's close to where I can buy it. I have a note for me to get long around 145. So I like the ascending channel it's going into. I don't want to chase it when everybody loves it. I thought I wanted to be Walmart when they released the Walmart Plus thing, and I still think that that's going to be a moneymaker like the Prime when they had 100 million subscribers. I mean, this is Walmart. They have more users than people think. So I think that number would be huge.
Sleepy Stock, DraftKings, DKNG.
I was long. I still like it on dips. Now it's trading inside of a box. So I'm going to show you a chart and chase the breaches of the size of the box. Otherwise, trade the range. I like it long term. I mean, I looked at the concept. People love to gamble. People love sports. Get the sports back online. I think this one goes far. I would not short it.
We got a tip, $7.77 from Green Third Eye. Problem is BITW is not a trade. It's an index, a crypto index. So I don't know if you can do a technical on BITW, but maybe
do a technical.
Is it a Bitcoin thing?
Yeah.
So is it a Bitcoin thing? If it's
Yes,
a Bitcoin thing, I called Bitcoin 18,000 months ago. I said, here, I did 3 videos on it.
What do you call now?
I'm calling it's not a place to get long. I would get long if it gets back down to 16 or even 13, which was the neckline from which you broke out. So that's the Bitcoin deal. You missed it this go around. It's going to fall again. Buy it on the dip. However, I am long gold, and they're the same concept. I know people are probably cussing me out, but they are. If we can have a conversation later, it's the same concept. The dollar going into the toilet for a reason because of the Fed. And this is the only way you can hold your value where the government doesn't affect you. Bitcoin and gold.
This is a chart of Bitcoin, just FYI here for everyone who's watching right now. Nick, can you clarify 1 second? When you say you're long and when you say you're short, how is it? Are you long via call or puts, or you're short?
Okay. So in gold, I'm long gold calls out to next year.
Okay.
So
most of your longs and shorts are via options. You're usually in options, right?
Well, I was clarifying what, like,
right. And the Netflix, I'm long by selling a put spread on the breakout. I also recommend a debit call spread. It's usually $10 wide. It usually costs about $3, which leaves me about $7 of upside. And it usually has a lot of time on the clock.
The only stock he owns with is in his Sun portfolio, and it's Uber.
Straight down for 6 days here. Snow, SNOW. We're talking about a stock that'll blow off top of 429 a week ago. It's now 314, so it's been hammered. SNOW is a time to buy the dip in SNOW.
Okay, so I'm going to draw a line to the first day, and there was the high tick, whatever it was, 320.
Yep.
Thereabouts, and just ping off of that, and another line would be slightly below it. I mean, right here it has a small pivot.
We're down $15 in the pre-market.
Okay,
too, so it's 314 right now.
Okay, all right, perfect. So it's below that line. So forget the right here comment. So that's already gone. There's another tick of interest that was on 22nd of October, somewhere around 299, or let's call it 300.
Can we see charts on these, Joel?
Yes.
I thought, Spencer, you were doing them.
We're doing charts.
Give Nick a second to get the chart up, and then the chart.
I don't trade it. So wait,
we are so demanding here, Nick.
Wait. You know, I
spending an hour with these guys.
I was looking for my morning wake up coffee. So here's my beef with. Remember my beef with Zoom, the price to sales. I don't mind the stock being expensive from a PE or losing money or whatever for growth companies. I don't mind it at all. My beef is how excited are the buyers when somebody pays Snow over 200 years worth of sales in the current stock price. I know Jim Cramer has told us that we're idiots. We don't know how to do math, but because Snow does something different, I don't know what it was, but it's 200 years worth of sales inside. So that's twice as expensive as Zoom was. Zoom just got a haircut on that front. So 200, it's too rich for me. I don't know the company, but from a trading perspective, the base that served for that crazy earnings spike is 288, 289. Ping off of that. How close to that you want to get?
And I just want to clarify a comment from earlier when Dennis, Joel, and Nick are all talking about hedging. They're talking about hedging their trades. You guys don't hedge your investments, right?
No, I don't. I don't hedge my long-term portfolio.
If you make an investment, you have.
He's only got one. He's only got Uber long-term.
If you make an investment, you have a thesis. If your thesis is correct, there's no need to get out. You just manage the size of it to see if it's still good for the overall portfolio.
Yeah.
Most of the stuff I do is trading by definition because I sell puts on oversold stocks. I don't try to short other stocks. You know, the neo short, I put short in quotes because buying a put spread or a put on a stock is not a hard level short. So I'm not picking a fight. I'm trying to gain some money out of a price action that's negative. So yes, these are trades, and when I say get long, it depends. If somebody loves the stock and wants to get into it right, then they might find one of these levels as a good starting point. So if you love snow, if it gets closer to 290, 280, it makes for a good starting point based on the chart we're looking at now. The base above 260 is pretty strong.
Dennis, you did do we did do a little hedging back in February and March. So
That's the only thing I was going to say is, so in 20 years, I've invested in the stock market since 1996, and I've bought some stocks. And I still have some stocks that I bought back in the early 2000s. So I do hold some stuff. The only time that I've hedged my long-term portfolio really in the last 20 years was started in January of 2020 because I was really worried about the coronavirus. And we know I bought puts. I bought long-term puts against my long-term portfolio because I was nervous that we were going to crash.
But you weren't trying to make money off of it. It
happen in March.
So that's what. So I appreciate you saying that, because I've had many conversations where we say, I have a protective put and it's profitable. I was like, no, it's not. The only reason it's profitable because you're losing somewhere else. And if you're not losing somewhere else, you don't have a protective put, you have a directional bet on the market. So make sure that you know what you're buying, and you don't protect everything all the time. And you should be partially hedged to give you a few minutes to react to an oh shit moment on some morning open or something.
Again, my trading portfolio, I do not hedge my long-term portfolio except for February because I thought we were going to the zombie apocalypse.
And you know why you don't hedge your investments? Because headlines don't matter.
Long-term, yeah, it's true.
Very few headlines matter. They don't create new price paths. They might exaggerate the current price action and maybe expedite it, but they don't create new.
Cash is a hedge too. You know,
oh, absolutely.
I mean,
there's no inflation according to the Fed. So,
and also, don't start on that. I mean, also like your investment horizon too. You know, where are you? Are you, a young buck like Spencer who's going to be investing for a long time, or like an old guy like me, hoping to get out of this rat race? I mean, that's one thing you really got to keep it. There's no one set formula. Hedge, don't hedge. It really depends on a lot of different things.
It does, for sure.
Please consult your investment advisor before making any investment decisions.
All right. Nick Shaheen is the author of Create Income with Option Spreads, also runs sellspreads.com. Nick, we always appreciate your time. You put in the Benzinga.com chat that your wife's going into surgery tomorrow. So good luck with that from all of us.
Life-changing.
Let us know how that goes. And she'll be in our thoughts. And
thank you so much.
Let us know how that goes. And we'll talk to you.
All right.
All right. Thanks, Nick. We'll talk to you soon.
Thank you.
All righty.
Just hanging out up here, folks. We're not trying to get back really any of these gains. Trading just $3 off the high of the pre-market session. Everything just kind of holding up. Really, no disasters out there that I could see. I mean, Dennis, maybe you'll be able to find one or two, but
there's always something moving.
Yeah.
Somebody was just asking, did I hedge back in 2007, 2008? No. You know why? And I was of the opinion that, no, I don't, I just long biased. I actually thought it was going to get into an ugly period, but I did not hedge my long-term portfolio. And I watched my long-term portfolio get absolutely hammered. And that is why I was so nervous in 2020 when we were seeing what was happening in China in January, and then February. And then obviously, it came over here in March. I just did not want to see my long-term portfolio lose 60% of its value again. And that's what my long-term investment portfolio did in 2008. It lost 60% of its value. And, my trading was great. That was my best trading year ever. So my trading was making up for it, but I have this long-term account, I had a bunch of stocks in there, and stocks like, Apple and, Microsoft and MasterCard were hammered. Now, again, 2008 was great for me long-term because I did buy some stocks in 2008, 2009 in my long-term portfolio. And those stocks made my investment portfolio, because there was, obviously everything got hammered. Some stocks were down 80, 90%. And obviously, they've come back over the last 10 years. So, I mean, it all depends, like Joe was saying, your time horizon, what you're doing. Are you listening to the show trying to get, a good, an investment idea? Or are you listening to the show for trading? I think the majority of people listening to the show are traders. They're active traders. They're looking for edges. I hedge my active trading. I do not hedge my long-term portfolio.
You want to see this crazy chart
Yes.
from Goldman
Of course
Sachs?
we do.
This is from
What do you want?
This is from Goldman Sachs. No, I'm going to bring
You
it up.
got it? Okay.
This is a chart of this is S&P 500 front month futures going back to January 2016. The dark blue line is the 9 regular trading hours, regular U.S. trading hours. The light blue line is overnight trading.
I've seen this one before. Yeah.
Right, exactly. It just goes to show there's 2 different worlds out there, right? There's the regular trading session and there's the overnight trading session. The story here probably is to just sell the open buy the close and sell the open.
This is
but pretty wild.
This is exactly why I moved to overnight trading. This is the reason.
Yep.
This is the reason, because I traded intraday. When I started 1999, I only purely day traded 9:30 to 4. And I did that until about 2011. Yep. And then I started to adapt and said, look, there's some major moves happening overnight here that I'm missing. And I was like, I make more money trading overnight than I do intraday. So I changed my hours. And I talk about that. I work from 7 a.m. to 10. And, obviously do the show, and during. But, and then I do the after hours session from 4 to 8. And the reason, I do that, and sometimes I get up in the middle of the night and trade earlier than that. I used to trade at 4 a.m. too, as I like trading the stocks. And the stocks open at 4 a.m. On ARCA and Island, or NASDAQ, it's called now. It's Old Island. I still call it Island. So this is showing you that there's huge alpha in trading overnight. Now, I'm not saying everybody, it's a different animal. It's a lot harder to, be trading. There's a lot more risk trading overnight. You got headline risk, and I became a headline trader, which is another reason why, obviously, I've moved to overnight trading, because it's not as many headlines that come out during the day. People wait for their news. I like trading the earnings calls. I like trading the sympathy, and those don't come out till after 4 o'clock. So other reasons as well. But this is a great chart showing you that, hey, you're just trading primarily intraday. We really haven't gone far in the last, 3-4 years. It's all been made overnight, holding overnight. So, I mean,
what year did we start? And what year did we start pre-market prep?
2013, I think. Was it around 2013? Right in there, 2013.
No, because the Facebook IPO was in 2012. So I believe it was late in 2011 when we did that. And
then we joined Benzinga maybe in 2013. We were doing it on our own for a while with our 50 UVU listeners.
Well, it was first.
I remember UVU.
Wait, we got a
It was
Dennis.
terrible. You listen to our old media. Oh man, we sucked.
Oh boy,
we could not speak.
Can we find one of those?
We still suck, maybe, but not as bad as.
Can you find, because we used to have like the pictures, and then every time we would talk,
we were only
like our head would, like, if you were talking, your head would like go bloom 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 bloom. Then if I was talking, it'd go bloom bloom bloom. And then we had that one guy in Indiana that listened to us. Remember his name?
Yeah.
Have you heard of him?
Kevin.
Yeah.
Kevin would listen to us.
Yeah,
he was a dedicated listener. He was like one of
loved us.
We had like 20 dedicated listeners, and Kevin was one of. He listened every day.
He was our first listener. We got to get him on.
He is an interesting fellow.
Kevin predates me, and no, I don't know.
He predates.
When did you join us, Spencer?
I know exactly when he joined us. October 2015. It was. I was getting ready to go to Israel. And the day before I left, or a week before I left, Brianna said, I'm leaving. And Spencer went from the customer service desk?
I was an intern. I was an intern.
Intern.
A little bit of everything.
And we were in the middle of the move, and we were crammed into this little room. Remember that? And so Spencer, when I came back, he started working with them. And I've gotten a lot of compliments from Spencer, or for Spencer. And the other thing that I want to say is that we're putting together our end of the year special, right? And if you just take the headlines from the Spencer makes up from the show from the entire year, you will get a perspective on the markets like no one else. And there's some really funny ones in here. And we're putting it together and we'll have it for you. I know Mitch is going to be working on it with me and Spencer. But, man, Dennis, we got some good clips of you. When you came back from your trip, remember you did that trip like right before the blank hit the fan. So we're working on it. We're gonna have it for you guys real soon.
Dennis came back. Dennis came back. He was wearing a mask on the show. I don't know if you know.
I know he was. We got.
I'm telling you, I did not want to go on that trip. I wanted to get out of the trip. I had to hedge my portfolio. I was that nervous about the market. I was like, I didn't get on an airplane and fly somewhere. I'm going to die. I don't want to die. I'm not ready to die. It was in the end of February, and we were going to Jamaica. We were going with friends, and Laura's like, I think, and then we were like, are we ahead of it or not? Me and my wife were having the conversation. We're like, it's coming. Are we ahead of it or not? And then the world started imploding while I was down in Jamaica. And I'm like texting Joel. I'm calling Joel. I'm like, I'm so scared I'm going to get stuck on this resort. Somebody's going to end up with coronavirus. They're going to lock down the resort and be stuck on Jamaica. And it isn't going to be a fun place when I'm stuck in my hotel room. I was just picturing that cruise ship. And I'm like, man, I just want off of this. And anyways, you know what, though? I was happy I went because I had to get.
Yeah, you were smart.
It was like the calm right before the storm. We didn't get coronavirus. So we made it out there safe. And then I came back and obviously the trading.
You FaceTimed from your balcony and you showed the pool. There was no one at the pool.
No, it's dead. And then they're like, then the people at the resort were saying, why, like, this is so quiet here. Is this? And like, no, this is seasonably. It was like 60% full only. And now obviously it would have been way dead a couple weeks later. But there was people not going on vacation back at the end of February because they're like, a little bit nervous about this virus.
Right. Sorry about that tangent.
Let's do one more. Let's just do PENN before we go, because this one ripped yesterday, and then they had news this morning. They're entering Maryland. This is essentially the news on Penn this morning.
Okay, let's do that one, and then we got a new listener, and I wanna help out the new listener.
I'm still long Penn.
Pull up a chart.
I will.
I'm sticking with it. I said I was going to 100, and then I spooked out and sold it. I rebought it at 63. I don't know if it's going to 100 or not, but I'm not betting against Dave Portnoy, so I'm still on.
I don't know if someone got called in yesterday or something, Dennis, because I don't know if there was some news or someone thought they had some news.
That rip in 80 to 84.
Wow. Yeah.
Blow off top.
I mean,
temporary.
I mean, you can say that, but if you're trading this or you're holding this long term, you want to see it stay above that former breakout level, kind of sneak below that. But just keep an eye on 79.01. That was the old time closing high. Looks like it's going to improve on it today. So I don't know. I think you can get back up to that 84.69. But I think it's going to take a little bit of work. And then someone new to just join the show, asking about Inseego. That did sell off yesterday a little bit, and it
from
just
the highs.
Yeah, from the highs. I mean, that was it got crazy here in the pre-market, and we talked about that 1680 level. Never saw that again. So
Kramer effect.
Not a great candle, but let's see if you can hold that yesterday's high right there near the previous day's low. So you don't want to see it leak into that second candle.
I'm still long in Inseego.
We didn't even talk SPACs, but that's okay because we've got.
I can't believe it. That's all we talked about on the
show. We've got the SPAC Attack show at 11 here on YouTube.com/TV. So I'm sure they'll hit on BTWN and some others there. Thanks to our guest today, Nick Shaheen. Thanks to all of you in our chats. Going to bring up our disclaimer so you can see that that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Hit that like button. Show us some love. Hit like, hit subscribe. You'll get notified when we go live. We appreciate all the likes, all the comments, all the super chats in YouTube, all the comments on Benzinga Pro, Benzinga.com. We appreciate you. We love you. Thank you. We'll be back. Joel and I will at 3:40 p.m. Eastern time. Until then, everyone have a good rest of your trading day and good luck out there. It's a wild time.